Warren Buffett's annual letter to shareholders is expected to be out tomorrow morning, widely read for any and all insights. What should you be looking for? Scott Rothbort, president of Lakeview Asset Management, joins us to discuss. And I guess I have to start with Kraft Heinz. Huge news there. Stock lost, close to 30% of its value, and it's a $4 billion hit plus to Berkshire. Would there be anything about this news in the letter tomorrow?
Well, I don't think specifically unless you knew ahead of time what was going to happen. But I'll say this. What I am looking for Warren Buffett to talk about are some of his large, older positions, although Kraft is not so old, but it's a larger position, in what I'll call old world type of business sectors. For example, Coca-Cola. I don't see where that company is going. They also this week or within the last week reported that they have to make some adjustments to their company. So that stock was down. We see Kraft Heinz is down. Wells Fargo really hasn't done great for him in the last few years. And the problem is that Warren Buffett doesn't have an exit strategy for a lot of these oversized holdings that he has. And the market knows this. So when the market sees that Kraft Heinz is going to take a markdown, they're going to be jumping right in front of the locomotive engine here. And unfortunately, Warren Buffett can't do much because it's hard for him to trade out of those positions. Same thing for Coca-Cola. Yes, he's been collecting this dividend for 3 decades, but the stock really has gone nowhere for the longest time. But he's stuck with this position. And I want to know, how is he going to work out of this? There's all this trapped capital that Warren Buffett has in these stocks. And how is he going to turn that into, actively, positively returning capital? Because it's just not. And if you look at the stock, it's down about 1% this year. He's certainly made some great investments lately, like Apple, and he's been adding to other things. But I think that the company's portfolio needs a good spring cleaning. But I don't know how he's going to clean it out.
Yeah, Scott, that's an interesting idea that I hadn't really thought about that much, which is that eventually you got to sell some of this down. And it gets me to another question, which would be succession at the company. Certainly they rejiggered the vice chairs last year. We know that Ted and Todd are going to be running that investment portfolio. But are you looking for any more clarity either tomorrow or at the meeting in a couple of months from Buffett on how he's going to work himself out of the leadership role at this company? Because, I think with the Kraft debacle, right? It's kind of like he sees the world a way that it just kind of isn't anymore. And I think the Apple position explains some of that, but it is getting to the point where you need to think about life after Warren at Berkshire.
I think that's a great statement. Well, not only do I manage money, I own my investment company, Lakeview Asset Management, but I'm also a professor in the Department of Finance at Seton Hall University. And I tell my students that when you invest in a stock, you not only invest in the company's business model, but its balance sheet and its management team. Now, I'm pretty comfortable that Warren Buffett has put together a pretty solid management team. And yes, we know that Warren's not going to be there forever, and Charlie's not going to be there forever. But there are a lot of young up-and-coming people who have been there for a while and have the brains to run this company. However, my concern is that the company has changed really from a traditional value-oriented type of investment pool to really being more of a private equity investor. And that's what happened with Warren Buffett over the years. He's turned into the world's largest private equity investor. The problem is that he's not centered out in Silicon Valley, where all of the modern-day great private equity investors are. So Warren Buffett will get the phone call from desperate companies when they need money, they need some financial healing to go on, but he's not getting the phone calls necessarily from Silicon Valley and all the new great deals that are coming out, and that's part of the problem. Yeah, he'll get a call from a Heinz, from a QSR when they need some capital, they want to do a deal, but he's really not getting in on the ground floor on, and I'll just use this as an example, Lyft. or Facebook and companies like that. And I think that's the bridge he needs to really build. And it really hasn't happened yet. And I'd like to see if he has some sort of idea as to how he's going to hire people who are going to be part of that future team.
Scott, do you think Berkshire Hathaway is broken up after Warren Buffett steps down? Very unusual company.
I think it has to be. What are you going to do with all that Coca-Cola shares that you have? You own 20% of Coca-Cola. What are you going to do with that? And I think maybe the honest thing to do here is that they have to take a lot of these old line businesses that I talked about, cordon them off, create maybe a Berkshire Hathaway C, and then just sell that or spin that off to their shareholders. That way they can focus on the really important growing assets, and kind of the dividend-oriented assets can be left to the shareholders, and they can decide if they want to hold that piece of paper or if they want to sell it off.
Scott Rothbort, thank you so much for joining us. Hope you have a fun time reading it tomorrow.
Oh, thanks. Have a great weekend, everyone.